Our housing market continues to be one of the weirdest housing markets in the history of time because we have home prices that are skyrocketing, and as soon as the pandemic hit, rent prices in major cities started crashing. Then as the pandemic started to ease, these rent prices started to go back up, but these rent prices have not stabilized. And so we have all these major cities where rent prices are lower or falling lower and home prices keep going up. What's up everybody, I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. As soon as the 2020 pandemic and recession hit, a few things happened. First, people were forced to stay at home and people started to get tired of their own homes. Second, interest rates were slashed, and so people that were tired of their homes decided this is a great opportunity for us to capitalize on low interest rates and go out and buy a new home. And third, you had all these people living in major downtowns paying these super high rents that were now working from home thinking, why are we living in New York or San Francisco or LA where we can just move out to the suburbs and pay a whole lot less money on our housing? It was almost like at the snap of a finger, we saw a huge shift in the housing market where nobody wanted to rent a home anymore and everybody wanted to own. Low interest rates mean that you can go out and buy a home and get a cheap mortgage, and now your monthly payment might not be as much as your rent. And a pandemic means you don't got to go back to your office. And a lot of people are never going to have to go back to the office like normal again. So for a lot of people, this means why do you have to pay rent in these super expensive areas when now you can own a home and have bigger space and just build an office inside of your garage or living room. This created a huge shift in the housing market, and this happened almost instantaneously where now everybody wants to own a home. Nobody wants to rent. And this caused home prices to shoot up while rental prices in a lot of areas stayed flat or went down. And part of that is and was due to the fact that you had all these eviction moratoriums out there which say that if you have a tenant that's not paying rent, well, too bad, so sad, you can't kick them out. And so landlords don't want to raise rents and risk their tenants not paying them because now you're not getting paid anything. I'm a real estate investor, and personally, I haven't had that many issues with tenants not paying rent during this pandemic. I think part of that is due to the fact that we created this tenant relief program and we worked with our tenants when this pandemic first hit. That way they didn't have to worry about getting kicked out or getting these late fees or anything like that. But I know some other real estate investors that were getting slammed by this because they were not being flexible with their tenants, and now they have a bunch of tenants that are not paying rent that they can't kick out. So this kind of created like a perfect storm in the housing market where now you have home prices going up like this and rental prices kind of just stayed flat or went down. I mean, this was more severe in your major cities, so like your New Yorks and San Francisco, because people were paying $3,000, $4,000, $5,000 in rent a month for a tiny little apartment. And these people are thinking, wow, well, instead of me paying $4,000 a month to rent a one-bedroom apartment, I could pay $2,000 a month and have a mansion and own my home somewhere else. You do have some areas like the suburbs where people are moving to where rent has gone up a little bit, but it's not going up as fast as home prices are going up. Now, typically what you see happen is as home prices go up, rental prices start to go up too, because if someone is a real estate investor and they buy a home and they want to rent it out, they're going to need to maintain a certain return, and if home prices are higher, they're going to need a higher rent to maintain that return. I'll show you what I mean. To keep the numbers simple and round, let's assume that you want to buy this lopsided $100,000 home and you can rent it out for $1,000 a month. If you make $1,000 a month, that's $12,000 a year in rental income. Now, all of this $12,000 is not your profit. You have expenses to pay. You have to pay your property tax, your insurance, your maintenance, your management fees, and all of that. So let's assume that this costs you $5,000 a year, which means this home would make you $7,000 a year in profit, which is a 7% return because you put in $100,000 and you're getting $7,000 a year in profit. But now what you're seeing happen is this home might be selling for $150,000 and you can rent it out for, well, $1,000 a month. So you're making the same income, $12,000 a year, and your expenses are actually a little bit higher now because your property taxes are probably going to be a little bit more. Your home insurance is going to probably be a little bit more because your home price is a little bit higher. But just for the sake of this example, let's assume that they stay the same. And so you are left with $7,000 a year in profit, but you had to spend $150,000 to get this property, which means now here you had the 7% return, but here you're only getting a 4.5% return. And this is me being generous, assuming that your costs stay the same as here. And so typically what you would see happen is in a situation like this, eventually you're going to see rental prices go up to kind of get back to what your average returns are for the area. Now, This 7% or 4.5% is really going to depend on where you are. In the Midwest, yeah, 7% is pretty reasonable. In the East Coast and West Coast, then maybe it's closer to 3% or 4%. So this really just depends on which market that you're in. But over time, what you would see happen is rental prices would go up to kind of match the return. But what's happening right now is we're seeing a shift in the market, partially because of the market and partially because of restrictions, because landlords don't want to raise rent out of fear of this eviction moratorium. And second, everybody wants to own a home. So people are going out, getting these low interest rates to go out and buy a home cheaper. So it's harder to raise rents because of that. It goes back to supply and demand. If you don't have a huge demand of people wanting to rent a home because everybody wants to own a home and everybody can get qualified to own a home, then you can't raise prices because you don't have the demand to raise prices. If everybody wanted to rent this home, then yeah, raise rental prices to $1,500 a month because now somebody will be willing to pay it because everybody wants to rent this home and be in this area, and so there's a premium cost to that. But if you don't have the same demand, then you can't raise prices. Now, again, real estate is very local. It depends on what neighborhood you're in, and what city you're in, and what state you're in. But a lot of cities and a lot of areas around the country are starting to see this. Some areas are seeing the opposite, but a lot of areas are starting to see this because you have this kind of shift in demand where everybody wants to own a home and people don't want to rent, and you have this huge shift of people and people flocking out of big cities to suburbs because they don't want to keep paying high rents when they can own a home and get a mortgage at a super low interest rate. But if there's one thing that you get out of this video, I want you to understand the concept of market equilibrium because it works both ways. So we have home prices that keep going up, and right now we still have very, very low interest rates, which means if you want to go out and buy a home or if you want to refinance your mortgage, interest rates are still dirt cheap. But if home prices keep going up and they keep going up, eventually your mortgage payments are going to start to exceed the rental costs. So people are going to look at this and they're going to say, well, yeah, I could go out and buy this home and pay $1,000 or $1,500 or $2,000 a month to own the home, but it's actually cheaper or a whole lot cheaper for me to rent the home because the rental costs are so cheap compared to housing prices because there's no demand to rent a home. And so if you start to see that happen, then you're going to start to see a shift. You're going to see demand come back to the rental market. Rental prices will go up to kind of meet the market equilibrium, because when you see a shift one way, you'll see a shift, and then hit a breaking point, and then it'll start to shift the other way. This is kind of how the free market works. But the interesting thing right now is you have regulations out there, like you have the mortgage forbearance program, you have the eviction moratorium program, which are supposed to end soon, but they keep getting extended. And so that kind of puts like a weird weight in the market equilibrium formula, because now the market can't kind of hit this equilibrium by itself. It is being slanted one way. We are in a very strong home owning market, because if you are a homeowner, well, chances are your home's worth a lot more than what you paid for it. So if you sold your home, you can walk away with a lot of money. And even if you don't want to sell your home, you can refinance your home and save a ton of money on your mortgage just by refinancing to a new cheaper loan. And if you want to be a homeowner, mortgage rates are still dirt cheap. And so for a lot of people, it is cheaper to own than rent right now, just because mortgage rates are so low. And it looks like mortgage rates are going to continue to stay low at least through 2021, maybe even through 2022. As a little bit of advice, if you are thinking about buying a home or refinancing your mortgage, make sure you shop around, because some lenders are going to charge you a whole lot more than other lenders for the exact same loan. At this point, the question that everybody has is, when is this market equilibrium going to shift, and how long is this market going to last? I'm going to talk about that in just a second, but before I do that, the following is an advertisement from our sponsor Credible, who operates a mortgage comparison website. If you're thinking about getting a mortgage or refinancing a mortgage, Credible lets you check pre-qualified rates for mortgages and refinances at no charge to you. Credible has multiple lenders competing on their marketplace, so you can compare great rates from different lenders and pick the option that's best for you. All you got to do is go onto the website and enter in a few pieces of information, which just takes a few minutes, and then Credible will present you with actual pre-qualified rates from different lenders. That way you can compare. Credible's pre-qualification process is easy to use. It only takes a few minutes, and checking pre-qualified rates does not affect your credit score. So if you want to see what mortgage or refinance rates you might qualify for, I got the link to where you can do that with Credible in the description below. Credible does pay minority mindset and advertising fee when you submit a pre-qualification request, and Credible Operations Inc. NMLS number 1681276 is not available in all states. Here's the thing. You hear about rising home prices on the news all the time, and everybody makes it seem like rising home prices are the best thing in the world, but rising home prices are only good if you are a homeowner. Because if you're not a homeowner, then you don't get any of the upside. While everybody else who's a homeowner continues to become wealthier, on paper at least, because their home values are going up. But if you're not a homeowner, you don't get any of the benefit. If anything, your rent prices just keep going up if you're in an area where rent prices can support higher rents. But this is where things are so strange, because we're saying home prices go up and everybody buy a home when we're in the middle of a recession. So what's really going on here? Whenever we go through a recession or an economic slowdown, the hope is to see a V-shaped recovery. What this means is you have the general population, when you go through an economic crash, becomes poorer, because that's just what happens when you go through a recession or an economic crash. Everybody just has less money. But then as things recover, everybody recovers together. When you go through a K-shaped recovery, it's a little bit different. And this is what we're seeing happen right now. So you have some people go into this recession and continue to recover and become wealthier, while you have other people that come out and they continue to become poorer. This is where you hear people say that you see a bigger divide between the rich and the poor. This is exactly what you're seeing happen, because you're seeing some people have the ability to go out and buy their dream homes and take advantage of low interest rates, and they are at least becoming wealthier on paper because now they're homeowners. But at the same time, you have a lot of people that are out of a job. They can't qualify to own a home. They're losing money, and some people are becoming poorer. And so you're seeing this really big divide because of this pandemic and this recession, because who are the people that are winning? Well, these are the people that have jobs. If you work in the tech industry, if you work in the finance industry, you work in one of the areas where you can continue to work, and maybe you saw a bigger boom in your business, then you're winning, because the tech industry saw everybody start spending more time on their phones and their computers. And so now the tech industry has way more demand than ever before, which is why you saw the tech industry boom. And these are the people that now don't have to pay $3,000, $4,000, $5,000 a month in rent. And so they're moving out to the suburbs and they're buying homes. And so you're seeing this recovery in these people, because everybody went through a recession for at least a brief period of time. And then these people started to boom. But at the same time, if you work in the retail sector, or the restaurant sector, or the hospitality sector, or the travel sector, well, now, guess what? Chances are you might not even have a job, because people aren't traveling like they used to. People aren't eating out like they used to. People aren't going on vacations like they used to. And so these people are now not making money, or they're losing money, and they might not even have a job. So these people are not able to go out and buy a home. They're not able to go out and build wealth. They're not able to have money to invest, because a lot of people might not have even money to eat. This is where everyone's asking, okay, well, what's coming next? Because while it's impossible to predict that, nobody wants to see a bigger divide between the rich and the poor. For one, what we know is that the Federal Reserve Bank wants to keep interest rates as low as possible. So probably through 2021 and maybe through 2022, we're going to see very low interest rates. This is at least what the Federal Reserve Bank is saying right now. Maybe this will change, but this is what we're hearing. And so if somebody is over here, where you're working in a sector that was really hit hard by the pandemic, the whole idea is hopefully the economy will start to recover. And as the economy recovers, you'll start to make more money. And when that happens, now you'll be able to take advantage of these low interest rates and buy a home and start building your wealth. Now, I do want to kind of mention that just because you're a homeowner does not mean you're becoming wealthy, okay? This is just kind of like what people kind of consider wealth, but it does not mean you're wealthy. If you're buying a home that you cannot afford, you are signing yourself up for a financial life sentence. And if you have a lot of people owning homes that cannot afford them, that's how you get a repeat of 2008. So I just wanted to make sure that's clear from a financial standpoint, because just because you own a home does not mean you're building wealth. But if we're just talking about what's going on in the market, the only people that have been buying homes are the people that have continued to have jobs or benefited through this pandemic. So it's this portion of the population. But you still have a huge chunk of the country that has not been able to go out and buy a home or do these things because, well, they lost a job or they're not making as much money as they did before. So you have to imagine that as more people start to get their jobs back and more people start to make more money, you're going to start to see more people go out and buy homes as well, because you haven't seen the second wave of people start to buy a home. Now, there's a chance that as home prices go up, these people are not going to be able to afford a home because home prices have gone up so much. Only time will tell. But at the same time, you also have a current presidential administration that is trying to make home ownership easier for people who are not homeowners. That's why Joe Biden is trying to pass this $15,000 home buying credit, which gives first-time home buyers $15,000 for free as down payment assistance, because many people cannot go out to buy a home. So you might see more things like that passed. There's a chance you could see banks loosen their restrictions even more to go out and buy a home. And so you have this big chunk of people that have not been able to buy a home, and they may not be able to buy a home as is because home prices have gone up so much. But that's where you could see more regulations change, or you could see different restrictions change, where now it might become easier for people to buy a home. And if that happens, then home prices will continue to go up even more. Now, in terms of rental prices, well, that's going to just depend on which market you're in, because if people are moving away from the big cities and you own a home in a big city, then your rental prices are probably not going to go up because you don't have the same demand. But in the suburbs, if people continue to move there, again, big if, because there's a chance that people will move back to the big cities. But if people continue to move into the suburbs, then you'll probably start to see rental prices increase in the suburbs, maybe trying to match the kind of increase in home values. Now, again, these are all hypotheticals. I have no idea what's actually going to happen. I mean, I don't think people are going to permanently move out of big cities. I think people will start to move back to big cities because people enjoy being in big cities. People like the ability to walk to work and walk to restaurants and just being able to hang out in a big area like that. But maybe it won't be the same as before, where rents were so high and the only people that lived there were the people that could afford to work in these super nice areas. And so maybe you'll start to see a more kind of reasonable rental prices in these big cities. I don't know. You might also start to see a change in the way the local areas start to tax their citizens, because if you were living in New York or California, then you also had to pay these super high state taxes. But now a lot of people just moved out of the state. That way they don't have to pay these super high state taxes while continuing to make the same income while paying lower money in housing costs. And so if these states or these areas want to keep attracting top talent, then they may have to make some adjustments, because if people don't have to live in a certain area to work, then they may have to do certain things to incentivize people to live there. So while there's a lot of uncertainty and question marks as to what's coming next, the last thing that I want to leave you with is that no market stays the same forever, and no market continue to go up forever. And so this is just something you want to keep in mind, because housing prices cannot go straight up, and they will not go straight up forever. Same with rental prices. And so you have to start to see this market equilibrium. When is it going to happen? I don't know. But this is where you have to just understand that yes, home prices can go up. And if you see more demand to buy a home, home prices will continue to go up. But eventually, if home prices grow up too much, then people will not be able to afford homes the way they did before. And so if people are being outpriced because home prices are too much, then you're going to have to see home prices correct. If not, then you're going to see more assistance by the government or banks so people can be more easily homeowners. But if that doesn't happen, then home prices will correct. And so this is where you just kind of have to understand that market equilibrium is a thing. So when you're making a home buying decision, make sure you look at the financials and make sure you can afford your home the way it is today. If you cannot afford to own your home, don't stretch yourself too thin to go out and buy a home because you think home prices are going to go straight up forever. Buy a home because you can afford it, not just because you think it's going to make you rich. If you enjoyed this video, here's the video on buying a home that I think you'll love. And while you're at it, join our free finance and business newsletter. And as always, keep hustling. Like 9 out of 10 millennials say that they want to be homeowners. But unlike what your cousin Bunty says, buying a home the right way isn't so simple. If it was, you wouldn't have so many home buyers regretting their decisions.